Last month I outperformed the S&P 500 by nearly a whole percent. This month I've reallocated some funds, so I'll break down my portfolio and show you the pros and cons. My first stock pick, which is actually an index fund, is a Europe index. Mine is by Vanguard. And this is actually the bulk of my portfolio at 40%. And there are a couple reasons for this. Number one, compared to the S&P 500, they have a cheaper P to E ratio, which is price to earnings ratio. Another factor is they have a higher dividend yield. At over 3%, significantly higher than the S&P 500. Also, they have slightly different sectors, slightly less tech, so if you're worried about the tech bubble, I also wanted to steer away slightly from America just because of their debt and higher company valuations. Let's get on to the next one. The second, and this is the second biggest in my portfolio as well, is the S&P 500. I know I said possibly 500. I know I did say I wanted to reduce my American exposure. However, this only sits at 15% of my portfolio value. Now, I did want to reduce my American exposure, but I was happy with 15%. If there is something that happens, or if there's a drawback due to some bad AI news, such as Nvidia's earnings on after markets close today, 15% of my portfolio is completely acceptable to have, a 10% drawback. So this is my second biggest position in my portfolio at 15%. The third position I have in my portfolio is AI stock picks. As you guys are aware, if you've been following my account, we let ChatGPT and DeepSeek act as my stockbrokers, picking 5 new stocks every month. And so far, ChatGPT has had an over 80% gain in 8 months, and DeepSeek 35% in, I think it was 4 months. So between the two funds, we have ChatGPT and DeepSeek, and I allocate 5%. Sorry, that's a bad 5. Into each, which gives me really good returns. However, these are, especially the ChatGPT, very tech focused again, and usually American focused companies. So when I look at my whole portfolio, I'm looking 15% is in America, also potentially another 5% out of these. So we've got 20% American exposure here already. Does build up, and 40% in the Europe one. Thankfully though, the Europe one is less tech heavy, so you have things like banks and pharmacies and slightly more stable companies. On to the next one. On to the fourth pick, we have a small pie I've made in Trading 212, and this is personal stock picks. So I like to buy companies, I'll just do personal stock picks. I like to buy companies off bad media or that aren't following current market trends. As you guys know, we are on a bull run at the moment, so going straight up. However, I like to buy companies such as, let's say, Adobe is one of them, that are not at all-time highs. So they might have, this is the current market here. However, Adobe might be somewhere down here, all-time highs, and we're sitting there. As you can see, not following market trends. I also look at if I personally believe they are undervalued. So that's what is built up of that personal stock picks. And again, that is 10% of my portfolio allocation. Again, some of these are American focused. So as you can see, that's why the bulk I try to put in Europe and only 15% in here, because through other things, the American side does add up. For the fifth sector in my portfolio, we have emerging markets. I will put the ticker up on the screen in case you guys want to have a look, but this is only 5% of my portfolio. These are often a bit more volatile, but a great one to add in just to get that upside, and only a small amount of my portfolio, so there's not too much downside. The sixth position in my portfolio is a specific industry in the economy, and it is actually AI cloud space. So AI cloud space is a really interesting one. I looked at certain sectors linked to AI. This was a year ago maybe I made this pie. So I looked at sectors in AI which hadn't quite yet had the boom. So Nvidia had the boom, all of this. But these AI companies also needed somewhere to store all of their memory. So I looked at AI cloud space and I invested in that. There was 10% of my portfolio in this, but I took profits and narrowed it down to 5%. I won't tell you the exact stocks I put in because you guys need to do your own research, but having a sector of your portfolio in an industry you think will do well in the future is a good idea in my opinion. Another one being things like industrial drones, things like Amazon, I'm pretty sure in the future are fairly unlikely to have people delivering their parcels. So they might implement things like drones, so that's another sector you could look at. For me, it was AI cloud space, only put 5% in my portfolio, another very volatile market. These stocks also happen to be related to America and again are tech focused. As you can see, my portfolio ends up, even though it's only 50% in the S&P 500, having quite a tech heavy and America heavy feel to it. But again, adding 5% to the emerging markets, 40% to Europe, and these change every month. So trying to get some diversification in the portfolio. For the seventh pick is actually a dividends ETF. Again, I put this at 5%. I do like having something like a dividend ETF, which will counteract things like higher interest rates in America. It also adds a bit more stability, slightly slower moving stocks. This personally is a really good growth move, and if there's a big dip in things like AI dividends, a dividend ETF with hundreds of companies in will stay fairly stable, so kind of offset some of those losses elsewhere. Good one to add in. The next position adds to the dividends, but an extra 5% I hold in cash. Quite a small position in cash, but I own a stocks and shares ISA with Trading 212, and at the moment they are giving 3.7% interest. Sorry for the bad writing, I'm doing this one hand. 3.7% interest, and actually it's paid daily, so this compounds to more like 3.8% interest. I do like having some cash on hand, especially again in case there's drawbacks. Also, if there's drawbacks, you can take this cash out and invest it into stocks to get better value for your money. So you can use this cash to buy dips in the market when they occur. And the last and final position I have in my portfolio is silver. And of course at 5% to total the whole portfolio out at 100%. Do like having a metal in here. I'm holding this portfolio roughly till I'm 30, so 11 years, just turned 19. But I do like having a metal in there, again, in case of interest rates, changes in the economy, uncertainty. Having a metal is really good. Silver's an interesting one compared to one like gold, because it's also used in industry. So with tech booms, especially in the space sector, silver's a really interesting metal that you could have a look at. So you're not directly investing in those industries, but silver is a really good one. Helps diversify the portfolio out as well and helps balance it out depending on the global event. This is a breakdown of my total portfolio for you guys. Feel free to ask any questions in the comments. Thank you for watching.